Good afternoon, everyone. Welcome to the August Wheat Outlook. We have Mr. Mike O'Day, who will be taking you through his PowerPoint presentation. We do encourage any Q&A, so if you guys have any questions, in the top right-hand corner of your Teams, there's a little question mark, and you can submit questions to me, and then I can ask them after the presentation. So hello, Mike. How are you, sir?
I'm good, thanks.
Great. Go ahead and kick us off.
All right, let's go ahead and get started. Thanks for joining us this afternoon for our August Wheat Outlook. We got the WASDE report out last Friday, and we've got a few changes to talk about and some other things that are starting to evolve in these markets. And we'll just go ahead and get started. Okay, I do work for a publicly traded company, so I need to leave this up for at least a minute. So we'll see how long I do leave it up for, because I usually don't leave it up for a minute. And I think that's probably about long enough so everybody should be able to read it. So let's just keep moving. All right, go ahead and look at our market factors we're going to focus on in this report. The only real difference on the front end of this thing is we continue to view this Russian crop getting bigger, and they're going to continue to export a lot more wheat. So this remains a pretty bearish factor in the short term. Like I said, I think the crop's getting a little better. The spring wheat yields are a little higher. Historically, this far into the harvest, we see their yields start to decline, and they haven't declined that much. So, ICAR raised their crop, Sobicon raised their crop. So, I think the market's probably like an 89 to 90 million metric ton crop now, and that's going to let them kick out 4 to 5 million tons of exports a month. It's just going to be a question of when we get into the winter, how efficient they can be on their exports. I did move the fund market structure down a notch on my bearish factor, because we have seen the funds start to sell this thing again, and we'll talk about that. Really, the only bullish thing we've got is still this headline risk. And I do think the major exporter carryout to use will be a much more bullish statistic as we move into like October, November. Now, will it translate into higher futures markets? I don't know. That's probably going to be more of a function of the cash markets. I still have the Canadian production as a bullish factor, and we'll look at that. I did move up the world demand a notch just because of this India talk. We saw more headlines on that today, and we'll discuss that later. Still not sure what we're going to see on China on imports, both quality and totals. We do have an issue with European wheat quality, but as all you smart wheat traders know out there, you don't solve a quality problem with futures. You solve that with basis and spreads. I do think the U.S. production and stocks numbers are a little bearish, especially from the soft wheat perspective, so we moved that down a notch. Southern Hemisphere, we're not going to get into much today. We'll save that for the October report probably. But clearly we've got a smaller crop coming in Australia and potentially a smaller crop in Argentina. Then my only real negative thing right now would be new crop acres, but with these wheat prices moving lower, I'm not sure we'll get the acres I thought we would have just a month ago. So we'll just get into it, get into the market structure a little bit. This chart is our cumulative fund position chart, and I think the funds are actually probably short down around here about 80 to 85,000 contracts now. They short covered after we got the end of the Ukrainian grain corridor. We had a few headline stories that pushed the market up. We had our limit up move the one day and then the limit down the next day. So they covered, now they're reselling the thing. And I think a lot of this selling has to do with the fact we're going to get VSR in Chicago. If you look at the funds positions themselves, the chart on the left is Chicago soft wheat. Dark blue line is the managed money. Like I said, I think they're down about here, about 80, 85,000 short. We'll find out tomorrow in the COT report. We saw this commercial go from a long to back down to short. This was the farmer selling, I think, on the cash side as harvest went on. The other interesting thing is I did throw the swap dealer, the index component of the COT report in here. They're buying, and it's both buying in KC and in Chicago and KC. And this is just a function of the price. So these index funds have X amount of dollars to allocate into the wheat market. As prices go down, they simply just have to buy more contracts to keep that dollar amount static. Over here on the KC side, you can see this is the commercial side over here. We saw pretty aggressive farmer selling, so we saw a bigger short come in, a little bit of short covering on that. So it did seem like we saw some pretty good commercial buying once we got this D suite below 750, as some of these consumers were covering Q2 and Q3 further out. Now the managed money has been a big sell-off, and I think this is part of the reason we have seen KC futures work lower, is the funds finally getting out. A lot of this was just KC Chicago spreads and KC Minneapolis spreads too, so it was an intermarket function, but all those positions have leveled off, and some of those spreads have got back in line. Now, the interesting thing is this is open interest. This is as of Tuesday. So the chart on the left is Chicago. We have seen a big uptick in open interest in Chicago. Since last Monday, we're up about 37,000 contracts, and this is fund selling. Simply, to me, this increase in open interest is the funds coming back in and pushing this thing lower on the price, but open interest is going up. KC, we saw an uptick when we saw the market rally through $9 and the farmer selling. It's really flattened off. We haven't seen much move in open interest in KC for the last couple of days. Now, I did want to go ahead and throw our index fund chart in here. This is the long grains, oilseeds, and livestock net index versus the Fed rates. We had another increase in the federal funds rate, so I just wanted to put this back in perspective where the Fed fund rate is. And we have seen a little more increase in the size of the buying by the index funds also. But like I said, lower commodity prices with a fixed amount of dollar spend just pushes these guys to buy more, whether it's corn, wheat, or soybeans. Moving on, take a look at the world numbers from the August report and a couple other things. So this is the change in the world wheat production from year on year. We have Australia down 10, 12 million metric tons because they had a record crop last year, and we're going into an El Nino season down there. Russia's down, but it's USDA is probably going to have to adjust this up a little bit. Kazakhstan's down year over year. Canada's down. China's down. EU's up a touch. US is up. Argentina's up, and India's up. But all these numbers are just year on year. Now let's look at the changes from last month. I think that's more interesting. The USDA raised Ukrainian production 3.5 million metric tons, but they did not adjust exports at all. So they're acknowledging the fact that the Ukraine's going to still struggle to get exports out. Now, they did raise Kazakhstan 1 million tons, which surprised me and a lot of other people. So they cited higher planted area. So we'll just have to see how the yields play out. It's a little higher in Brazil. On the downside, they lowered Canada 2 million. That's not enough, and we'll talk about Canada. They lowered the EU. I think that's probably enough, 3 million tons. That's probably where we'll wind up for the year. And they did lower China a little bit. So when we look at world wheat carryout versus carryout use, I normally don't show this chart. This is the entire world. We all know that half of these stocks are in India and in China, so it's usually not a good way to look at the wheat market. But I wanted to throw it up here just because I wanted to highlight the decline 1, 2, 3, 4, 5 years of carryout and smaller carryout to use. Now, the majority of this is coming out of the major exporters and India and China. But if this trend continues, we're going to see these markets continue to look for more functionality within the exporter matrix. So let's go ahead and look at our normal major wheat exporter carryout to use. It's actually unchanged from last month, still at 14%. We're still not close to where we were in 2007 at 13%. But I think by the time we get to the October or November crop report, we will be below this 13%. And it's going to be a function of smaller production in Canada, probably a little smaller production in Argentina and Australia over time. We could see another up in Russia, so it may offset some of it. But still, this number is starting to get pretty tight. The other thing I want to look at is I want to throw out the U.S. and Russia and Kazakh and Ukraine, and simply look at I guess we could call them the residual major exporters: Argentina, Australia, Canada, and the EU. And you can see we're down to record low carryout to use. in these four countries. And we know that the Australian crop could work a little lower as we move into the growing season down there. Argentina definitely needs a rain. The Canadian crop's probably going to drop 2 or 3 more million metric tons. EU still a work in progress. So my only point here is if there is any problems with any Black Sea exports, the world just doesn't have a whole lot of room to maneuver around not being able to get those supplies. So let's look at our major importers. This is the production. It's up just a little bit from the last report, the production side. Imports continue to be on a steady climb from the major importers. I don't see much of a change there. Now, it is interesting what the USDA did on their world domestic wheat use year over year. This is actually up from the last time we looked at it. We talked about this. You know, this was COVID. We had a huge spike up in domestic use. That was COVID. So people were stocking. They were stocking up again in 21. Now, last year we had our spike up in prices, and people had stocked up, so people were destocking. So we saw a decline in domestic use year over year. And this year we've got this projection of a little higher going into this year, but it's still not on the average of about 9 million metric tons. So let's look at it on the change from last month. They increased domestic use in Ukraine on feeding, and just the inability to export Kazakhs up a little bit. On the downside, we've got China down, EU down, and world in general down just on the domestic consumption. And I just threw this chart in here so you guys could see who is using domestic wheat by country. China, India, EU, the biggest users, but domestically. So let's look at wheat feeding. A few changes from last month. Ukraine's up, like I said, just because of the lack of the inability to export. Kazakh's up a little bit. The world's down a little bit. Mainly, they lowered the wheat feeding in the EU, and you can see how the countries stack up just on the right chart. How they stack up as a country by the domestic feeding. So exports, the only change from last month was they raised Russian exports 500,000 tons. Declines in Canada of 2. The U.S. was down. So overall, the world was down a little over 2.5 million metric tons net, and most of that was in Canada. And I just threw the chart up over here so you could see wheat exports by country. You know, Russia's up. You know, they may push 50 million exports this year, 50 million metric tons. The demand's there, the supply's there. Question is how are the logistics and how will the weather impact them on that January through March timeframe, where they tend to fight a few issues in the Black Sea. EU exports are up year over year. Canada down, Australia down, and you can see where the U.S. and Argentina fit in this. World wheat prices, these are just FOB values. The orange line is Ukraine, still cheap wheat, but you got to get it out of there. And the black line is Russian Novo. You know, we've seen this Russian wheat prices move up to $260 a ton, kind of minimum for 1250s, $255 for 1150s. So you've got French wheat competing with that. U.S. soft wheat today is actually below this. U.S. soft wheat is probably the cheapest world wheat offer out there on a FOB basis, but we're still fighting, you know, logistics and freight issues to get it to destinations. Both hard wheat off the Gulf and off the PNW still running at $50 to $80 a ton over both Russian and soft wheat and French wheat. And this is Australian wheat. We've seen Australian wheat firm up also as going into this last month. Just a quick look at ending stocks for the world. You know, Ukraine's up, U.S. is up, a few other countries are up. Russia's down, EU's down, China's down. So net, you can see we talk about when we look at ending stocks by country, still China holds the highest stocks according to the USDA. Not sure on the quality or what they're going to have to import because of the poor quality crop they had. They should be feeding more also. But you can see the rest of the world on stocks. It's a fairly tight thing. And what we know is, you know, China's not going to be exporting any wheat. So the global stocks have to come out of these countries. Talk about Russia real quick. You know, we showed this last week or last in the July report. You know, we've got USDA's got Russian stocks down to about 11.5 million metric tons on carryout, but the USDA is not acknowledging the size of the crop last year. Now, is it really that big crop last year? We have to just go with the assumption it is. So stocks could actually be, you know, 6 to 8 million metric tons higher just because of the carry in from last year's crop. And this crop production number will probably go up a little bit too. Now, I did want to show this just from a view of the Black Sea in Russia. So the chart on the left just shows the Black Sea. This is the ship tracker that you guys can go pull up. And I put squares on the choke points. This is the Kerch Strait. This is the Bosphorus. These are the Ukrainian ports on Odessa. These are the Ukrainian ports on the Danube, and these are the Bulgarian and Romanian ports on the Black Sea. Now, it's interesting. We saw a Chinese or a Hong Kong flagged container ship move out of Odessa today along this corridor that the Ukrainian Navy has established. Now, is that a one-off? I don't know. We'll see if anybody tries to load a vessel up here. But clearly, you've got a huge amount of vessels trying to get in to the Danube and load at these Ukrainian port facilities up here to transload that grain either by barge up to the Romanian ports or put it on smaller vessels to get it out of over to the ports over here or down into Turkey. Now, the reason I wanted to put this up here is show the Kerch. You know, we've seen, you know, some bombings of the bridge. We saw the Ukrainian remote submersible drone attacking a Russian tanker in this region. So if there's an issue here, this is a problem because 40% of the Russian exports do flow through the Kerch Strait. They load up here in Rostov, and there's a transloader at Kavatskaz, and so we just have to watch the situation because if you think about it, if the Ukrainians ever would gain a foothold closer down into the Crimean Peninsula or get back some of the territory they lost right through here, you know, they could interdict these sea lanes pretty easy. I don't know what's going to happen, but something we got to think about. And this is the main Russian deepwater port of Novo. But the thing we got to think about here is this is not only a grain terminal, this is an oil terminal. So if the Ukrainians ever did want to disrupt Russian oil exports, they would hit this port with something. So just that headline risk we wear every night going home in these markets. Like I said, any action by the Ukraine against Russian shipping would be very bullish for wheat prices. And again, like we saw the Russians board a vessel over the weekend up here. The market didn't react to it. Like I said, I think we've got a bunch of headline fatigue of these headlines in the market, and trades, especially the speculative trade, is discounting any headlines out of there, but still have to think about what the long-term potential is for not only Ukrainian agriculture, but exports in general. So the other thing Russia has to deal with now is currency. So this is a monthly chart of the ruble. We traded over 100 on Sunday into Monday. We saw the Russian central bank raise rates from 8.5% to 12% on interest rates. There's talk of capital outflow controls, capital inflow controls, forced pushing out of currency into the economy. So the ruble has backed off. And this is really a benefit for the exporters. The Russian exporters is printing money right now. High elevations, cheap wheat stocks, good demand. So like I said, they're going to push as much wheat out as they possibly can while they can. This next chart shows on the right is domestic wheat prices in Russia. So the orange line is the CPI. This line up here is domestic wheat flour prices. These are prices for grain in the South. So we are seeing inflation move a little higher in Russia on food. So this will be something we'll be keeping track of as we get into the year. And it relates directly back to the consumer buying power within Russia on the weaker ruble. Not a big deal today, but let's see where we're at in January, February. I'm not going to spend too much on the Ukraine. We beat this story up. You know, crops a little bigger, stocks are going to grow just because of the inability to export. But we know they're going to export something. I mean, they're already exporting 1.5 million tons of grain already this year. But again, we'll highlight the transportation last year. The red is through the corridor. You can see how that shrank in July. But the green is the Danube ports. The blue is rail. Orange is a truck. So they're still going to try to get out, you know, 1.5 million tons of grain a month. And you could see it on we finally got the EU officials to put out some export data earlier this week. And you can see already more Ukrainian exports of wheat and corn into the EU, displacing EU stocks. Talk about the EU real quick. So on the left chart, I threw up this nice chart that the USDA puts out showing wheat production in the EU, where it's at. So you think about the area up through here, the Baltics. This is kind of a hard wheat. This is where we're seeing some exports into the U.S., both out of Germany and Poland. But you get down here, most of this is soft wheat. It's real susceptible to rain. On the crop size, we see a downtick in production, downtick in stocks. And I wanted to highlight this 30-day precipitation that we've seen that's causing quite a few quality problems for wheat quality in Germany, France, Poland. This picture was sent to me by a client of ours. This is soft wheat in Germany, get a lot of sprout damage. So you can have a lot of feed wheat, not only in Germany, but in Poland, but some in France too. So, and we're already starting to see premiums firm up. If you look at 1150 Pro versus 1250 Pro in the Baltics, there's about a $10 to $15 premium. Those premiums are probably going to widen out. You have to force this lower protein wheat either into the domestic feed channels or into some form of export channel. But you know, this is what's probably going to keep this market more interesting to us from an export perspective. Could the U.S. pick up any exports in the second half of the year because of quality problems in Europe? Something to pay attention to. Talk about Paris milling wheat real quick. We don't touch on it a lot, so I wanted to throw this chart up here. This is Paris wheat for the last 5 years. Right on average price, honestly, around, I think we closed at 228 today. This is in euros, but it actually looks like a fairly good entry point for the consumer side if they want to buy some wheat. The importers should be looking at it, still fighting, you know, currencies and financing on the import side. But you know, we don't see Paris wheat dip much below I think 218, 220 is what it looked like to me on the chart. The downside potential was just kind of looking at that. So one thing we do watch, we watch these Paris versus Chicago and Paris versus KC spreads. This is the Paris versus Chicago on the left. This is a weekly chart back into dollar. And when I did this on Tuesday, Paris was a 78-cent premium versus Chicago wheat, but it bounced off the lows. I really wanted to highlight the KC one. So at one time, KC was trading at nearly a $2 premium over Paris wheat. This was back in that April-May timeframe when we saw the European wheat out of Germany and Poland trade into the U.S., into the U.S. milling market. Now this spread is corrected pretty solid, and it's a break in KC mainly doing it. So this spreads back to a 50-cent discount KC to Paris wheat. So this will knock out a lot of that ARB opportunity for bringing in European wheat into the U.S. So as we move further into the next few years, this is what we'll be watching for if we see more offshore wheat work into the U.S. on the milling side. We always see a little bit of feed wheat come into the U.S. and the East Coast, but you know, our focus will be on the milling side. Talk about Canada real quick. You know, the USDA dropped production to 33 million metric tons. I think they're 3 million tons too high, maybe a little more than that. But look what it does to carryout. So we're pulling carryout down a minimum pipeline in Canada. And if we continue to see the crop drop, what you wind up getting is smaller exports. So I threw up the Canadian wheat production over here. You know, you think about the prairies. This is, you know, 32% in Alberta, 45% in Sask, you know, balance in Manitoba. Then you get soft wheat down here in Ontario. And this is the main Durham area over here. And you can look on this Canadian drought monitor. This is a percent of normal soil moisture. You know, they've been in this big drought, and you can see it's in the main growing areas on wheat. So we're probably going to see this crop shrink a little bit. And we're through the growing season now. And Adam and I were talking about this earlier in the office. You know, we're starting to see some bigger rain forecasts now coming into the prairies also. That seems to be the pattern we've seen. Every time we start to get into wheat harvest somewhere, it starts raining. So we'll have to pay attention to the wheat quality if we see some excess rains up in the prairies going forward. This is our death by PowerPoint. This is the only spreadsheet I think I've got on this PowerPoint presentation. So this is the current USDA balance sheet right here. They've got production of 33 million, exports of 24.5. I've got production of 30, of which that 4 million is Durham, balance springs and winters. But what that is, once you get below this 33, it becomes a 1-for-1 move in lower exports to keep carry out about 8-9% carry out to use. So I've got exports at 21.5 million metric tons right now. So that will impact not only the spring wheat market going forward, but it'll impact just the general hard wheat milling demand around the world going forward. So let's just take a look and see how this comes out. I did see a 28 million metric ton estimate for the Canadian crop earlier this week too. So it's a work in progress. So let's talk about India real quick. So, you know, this is the current USDA balance sheet. You know, this is the production side of India. US is up here at like 110, 112 million metric tons. Most people are using 100. But I think the thing to pay attention to is the carryout. So India had a huge amount of carryout in 2020. So what did they do? Go over here and look at this balance of trade sheet on the right. This blue line shows exports. So in 2021 and 2022, they exported nearly 14 million metric tons of wheat between the 2 years. This year, the USDA still has them for 1 million. That won't happen. But my point here is they took their excess stocks and exported them, and now they're going to have to import wheat. Now, did it work out for them? What were they selling wheat for here? I think they were selling wheat pretty high. They're probably going to be able to buy it in a little cheaper, but the balance of trade question comes down to food security. They have to keep a minimum of 8 million metric tons of carryout for some of their food security rules. So how much wheat are they going to have to import? You know, I'd been plugging them in for 4 or 5 million metric tons. I think that's what most people were. But we saw another headline today talking about another 9 million tons of imports on a peer-to-peer trade with Russia. And the story claimed that they'd be able to buy Russian wheat at a discount. I don't think that's going to happen. They're going to have to pay market price. I don't think the Russian exporter is going to be discounting it unless the government tells them to. But the point here is, you know, they use 8 to 9 million metric tons a month. So if they have to import 8 to 9 million metric tons, that's just a month's usage. But why are they going to have to import in wheat? It's a production and it's a demand problem. So I wanted to look at Indian wheat production. You can see the production areas here, but we need to look at rice also. So rice is a big problem in India today, price-wise. So these are our price charts we look at. These are India spot wheat prices. They've kind of moved back up. These were charts were done on Monday, but these are rice prices. They're moving higher too. And the bigger thing is this little chart here down here on the left, on the bottom, this is current. So India food inflation jumped from 4.4% to 11.5% in July. It's probably going to work higher. What's interesting is look at the next chart on the right. This is the historical food inflation for India. Once it gets up above 12, 13%, the government starts to have to take action. So they'll have to be importers. And the main thing is we're going to focus on, we think about the wheat side, but the rice side is the really interesting thing. So we took wheat and we looked at it from a per capita use in India. And you can see since about 2021, this has been on the decline on the per capita use. But look at the rice use, the same time frame. This has been going up on a per capita. So they're using more rice, a little less wheat. But if rice prices continue to escalate, we'll probably see this wheat per capita use pick up. And we're focused on rice and diets. This is a great little chart we picked up from the IFPRI. It just shows the caloric intake from rice, kilocalories per capita per day. And you can see where rice is used most as a food. And it's important because when you look at this, so when you look at the USDA on the balance sheet, how they look at major rice exporters is they use Burma, India, Pakistan, Thailand, and Vietnam. So if you look at this carry out to use chart, it doesn't look too sexy, right? But India is starting to stop rice exports. So you kick India out of this rice export matrix, this thing gets pretty snug pretty fast. And we did look at world FOB wheat prices. You can get decent information on Burma and Pakistan, but we can get pretty good data on Vietnam and Thailand. And you can see how these rice prices are escalating. So is this a bigger story for Asia going into an El Nino growing season? We're already talking about problems with India or with China rice production from some of the flooding. If you do get this El Nino impact in Thailand and Vietnam on the rice growing season, a lot of moving parts when it comes to calories. And you think about wheat and rice, it's just carbs, man. So we're going to think about how these prices will impact the wheat prices moving forward. Talk about wheat in the U.S. real quick. Not a lot of changes. The only thing I would tell you is we did get the USDA did update their harvested acres in the August report. They usually wait and do that in the September small grains final. I'm not looking for many changes in the small grains final, but we'll take a look at it. But again, we had higher planted acres this year off prices and a little higher harvested acres, but we saw less harvested acres on the hard wheat because of some of the issues in the growing season. Just a simple bar chart showing production over the last few years. They did raise hard wheat to 585 on the winters, small increases. Soft wheat, big increases, up 29% over last year was on yields. White wheat was down a little bit. Spring wheat, they lowered hard spring 7% from last year. So spring wheat can get a little interesting on the balance sheet, especially if we get a smaller Canadian crop. And Durham, they actually raised a little bit, but it's still 10% below last year. So you look at winter wheat production. The thing I like to highlight on this chart is the 5 southern states grow 78% of the hard wheat. In Kansas was 200 million of that. In Kansas alone, we'll grind 100 million domestically between the gluten plants, between the flour millers. But half of this production goes away through the year. So we're going to have smaller carry in, we're going to have smaller carry out for Kansas. So we need to see some big crops come into this region. Now it's interesting to look at soft wheat. The production was up quite a bit, down on the white wheat, but the soft wheat was up on yield. But you think about soft wheat, 34% of the crop was grown in these states here, which is the delivery states. So it's on yield. These are winter wheat yields. Soft wheat yields were huge. Both Ohio, Indiana, Illinois, and Kentucky had great, and Tennessee had great crops. So that's why the crop size went up. You can see the winter wheat, hard red winter wheat in Kansas and Oklahoma was down, but a nice recovery in Montana, hard red winters. And soft white production was down in the PNW. Spring wheat production down from the previous report, down from last year, mainly on the yield side, smaller yields in South Dakota, North Dakota, a little bit better in Montana, but overall the spring wheat crop is going to be lower from on the hard red springs. Durham, they did update a little bit better yields in North Dakota from the previous report, but still production's down quite a bit year on year. So total U.S. wheat use is still exceeding production. Although we're going to get a bump up in production this year, we're still going to use more than we're producing. So carryout's coming down. Now looking at some of the by class stuff we'll get into, I think the USDA is pretty good on some of these numbers, and we'll get into that. Wheat demand, they did lower exports, total wheat exports to 700 million bushels. So that's, 3 years in a row decline, and that's simply on supply side. And, you think about these by class balance sheets. We don't have a lot of excess supply we could plug into the export market today anyway. And this is food use, it's pretty steady. So US wheat carryout, these USDA, and I actually think they're okay. They may be a little too high on their spring wheat, or they may be too low on their hard red winter carryout, but we're going to go with the USDA numbers for today until we can look at the September small grains one. But carryout is going to go up a little bit. Carryout to use is going to go up a little bit year on year. Let's look at the by class stuff. This is our winters, our springs, our durums, and our whites over here, and soft wheats over here. So look at hard wheat first. They dropped. I was actually surprised they did this. They dropped their export number to 160 million bushels. That's pretty close to where I was at. I would tell you today, my hard red winter wheat export numbers closer to 145, maybe 150, but it's close enough just to use the USDA one for today. A little lower on feed and residual, and pretty steady, a little higher on flour use, the food use. They actually increased this and decreased spring wheat in the grinds because of the move in Minneapolis KC spread. So hard red wheat, winter wheat carryout's up a touch, but carryout to use is higher. And this could even go a little higher if they're a little too high on exports. But like I said, for now, I think these numbers are good to use. There's no sense debating over 5 or 10 million bushels here or there until we get later into the year. So carryout to use is increasing, but it's simply a function of less demand on the export side. KC wheat prices the last 5 years, we're down around $7 today. This chart's from last Friday. So we're continuing to drift down. The average price is about $6.75. We're still overpriced in the export market, except for our inelastic demand into Latin America and into Mexico. Where price is going to go, probably going to continue to drift sideways, a little lower without something changing until we get into the first year. Now, seasonally, we tend to drift lower until we get into October anyway. So the seasonals are against you also here. I did want to throw this out here. I stole this idea from one of my ex-colleagues, a very good analyst who resides in Ireland. He threw this chart out, and like I said, we like to borrow things that people do better than we do, so I borrowed it from him. And I was looking at Kansas City wheat prices. So think about some of the scenarios we have. If we see a Black Sea shutdown, something happened with Ukraine attacking shipping up there, you could see Kansas City wheat futures run back up to above $10 to 11. That would be on demand. But the opposite of that, if the war ever ends, we could see Kansas City wheat futures run closer down to $6. So we threw in the no corridor, no Danube, no Azov. Prices are probably going to continue to get escalated. No corridor, no Danube. Prices will probably go back to $8, $9. Keep the Danube working. No corridor. Prices are probably around $8, $7.50, $8.50. But if you sometime for some reason we get the UN export corridor back going, prices are probably going to work lower. And that puts us down to the $6.50 to $7.50 area right here. Basis has just gotten hammered, and this continues to be the story for Kansas City wheat. This is the 12 protein basis over KC. KC is a gateway that we trade to the other mill points, and it's up a tick or two from here, but this thing is just under pressure. There's no Gulf program for these millers to compete with. They know they don't have to go chase any supplies right now. Will it improve? It will a little bit, mainly because we do have some carries back in the market. So there is the ability to carry grain. These still don't cover interest costs. So we'll see some people carry some wheat, but there's already some cash carries in the market too. We saw some OND wheat trade at 120, 125. So you've got to carry in the board. You've got to carry in the basis out into the OND and JFM slots. But this basis has been the story for Kansas City wheat. And the bid to the growers are much lower too. Calendar spreads in KC, and I was wrong on this one. I thought that the SEPT East would trade between 4 and 8. Well, it traded out to 18, 17, 18 briefly earlier. We're back into 9 and 10. That's probably where we're going to trade as we get closer to first notice day. The question is, will we see any deliveries? And that's going to be an interesting one. If you look at the cash bids in the Salina and Hutch, they're below delivery values. For under 10, will we see some of these guys deliver wheat? We might. And I just threw up the day chart of the SEPT East wheat spread because I wanted to show this. So we traded out to 17, we traded out to 19 and a half one day, and then reversed it that one day. This was our crazy Ivan in the spread here. And since this day, the spread has slowly been firming up. You know, there's a couple things going on here. The Rogers roll was going on. Looked like we had some poor execution on that because those guys normally do that on a TAS. They'll buy and sell the TAS to get their spread done. But somebody had to come in late and do almost a 2,000 lot on the close. Some talk, this was associated with some of the cancellations on some of the imported wheat. You know, we saw a vessel of Polish wheat that was rejected at the Gulf. That got everybody pretty excited. We heard that 3 or 4 other vessels that were destined for Houston have been washed out or canceled or resold to other destinations. But you can see we got a nice turn from our MACD on the spread anyway. We're backed up to almost an oversold or an overbought number anyway. So like I said, 11 is your midpoint. You know, 10, 12 is probably a good spot to look at on that spread. I am pretty friendly, the Dees March. So if you can get the Dees March at a level that you like between 6 and 8, I'd probably get in some of that. And I'm pretty friendly the March, May too. Looking at delivery stocks, I went back and pulled delivery stocks to 2008. This is where we're at. This is probably going to turn down pretty fast. You can see how quickly you can pull delivery stocks down year over year. So we may eclipse this low carryout or the low delivery stocks number we saw in 2008 this year by the end of the year. That's why I'm a little friendly, those deferred spreads. Mainly it's just on delivery stocks. Now, one thing before we move on to spring wheat, looking at new crop acres, I'll probably start to do those in the next report. But if you look at the insurance guaranteed price on Kansas City wheat last year, I think it was $8.49. I believe that's right. I looked at those today. I'm trying to remember. The price today is somewhere down around $7.39. I know we're $1.40 spread between the guaranteed rate on the insurance price versus where we're at today. So I think hard wheat acres will probably be stagnant, maybe a little higher, but the price incentive's gone away for these producers to plant extra acres. Spring wheat, this shows total supply, production, and imports. We import a lot of wheat from Canada. So this smaller Canadian crop may influence or impact these imports to the U.S. Not much, but it could. Looking at the demand side, like I said, they mainly lowered food use, taking out spring wheat out of the flour mill grinds and adding in more hard wheat. Exports they lowered, and feed and residual is non-occurring. So spring wheat carryout, it's not bullish, it's not bearish. It's got an interesting spin to it right now. If we see any extra export demand show up that the Canadians can't take care of, so carryout to use around 30. Like I said, it's not bullish, it's not bearish. It's certainly neutral for my view. But you look at Minneapolis wheat futures over the last 5 years, you know, you get down around $8. I think anywhere around $7.80, $8 is probably a pretty good value for Minneapolis wheat futures today. The average is around 7.25 over the last 5 years. We're down below this upper third that we've been stuck in for a while. So like I said, you get down around $7.50, $8, you kind of run into a value proposition on futures themselves. So this is the Minneapolis KC wheat spread. This is why we're seeing the spring wheat come out of the hard wheat grinds. This thing's back trading around, between 50 and 60. This is a weekly chart going back and showing history over time. Could probably see this thing continue to expand. Now we're up against the upper end of the range. 75 cents is the upper end of the range. If you stay there through the year, you keep pushing spring wheat out of these hard wheat grinds. Basis on 14 Pro spring wheat's been getting pounded too. The grower was a big seller earlier in the year and has beat the crap out of basis moving forward. This will probably tick up a little bit. I'll get back to this 3-year average potentially. This thing ought to work back up over 100 as we get through the year. But there's also pretty good carries in Minneapolis wheat. So, the grower is going to be rewarded by holding it. Commercials have some room to carry some hedges. It'll be more probably about what the spreads do over time versus the demand side on spring wheat. Calendars, spreads are 15, 16 cents. If you need to roll SEPTs, this 17 to 18 area, 16, 18 area is probably a good spot to look at on calendars. Wheat delivery stocks in Minneapolis, we could potentially get pretty tight later in the year, and this could influence the spreads, especially the second half of the year, like we're talking about in KC on the delivery stocks. Talk about soft wheat. This is our problem child if you're a wheat trader today. And we had a big bump in production. This was those yields we talked about. So big increase in overall supplies. Carry-in was down this year, but we're clearly going to build stocks. On the demand side, we've seen a little bit of an uptick on the export side, uptick on the food side with more soft wheat getting blended in to the hard wheat grinds. So we're feeding more, but that's about to run its course with new crop corn supplies coming off. But nice little round of feeding this year. So soft wheat carry, it's going to build pretty dramatically. And like I said, I'm using the USDA numbers. I think they're pretty good right now. So soft wheat carryout's going to build close to 35, 40%. And it's got prices down below as the average. Now, where are we going to take these Chicago wheat futures? Probably that depends where you think corn prices are going to. If you're a $4.50 corn guy per gal, that's probably $5.50 Chicago wheat futures, isn't it? But anywhere down around $6 looks to be, fairly well priced. Like I said, we're below the average. But if corn prices continue to drift lower, it'll drag Chicago wheat with it, which will also drag Minneapolis and KC along with it. Basis, I like to look at Manel's bids in Fostoria. It's that Northwest Ohio area. It's a good gauge of what the soft wheat basis is doing. And it's beat to crap. Fact is, these guys really don't have any bids now for nearby bids. Their bids are for OND, they're 10 under, and the 10 under for JFM for bids. But you can see the difference between this and that Kansas City basis chart is the carries. You've got some huge carries in this market. They're going to stay wide. We're going to get a leg of VSR in the SEPTs. So this is what the carry calculator looks like for Chicago. This is the SEPTs. Current storage rates 0.165 bushels a day. So you got 91 days. If we get a leg of VSR, which we will, that storage rate moves to 0.265 cents a bushel per day. So we had full carry for the SEPTs around 27 cents. Full carry for the East March will be closer to 37 cents. So the question is, do we trade the East March out to 80% of full carry, which is around 30, and put another leg of VSR on? That'll be the interesting question. And we'll just have to see if we can do that. But like I said, you get down around 30%, or you get around 30 cents, 80% of full carry. That's probably a good level to think about doing some bull spreading in this East March. They ain't going to hurt you too much, just put it that way. But I did want to look at the forward curve in this thing. SEP futures, when I did this, were at 626. And March of 25, we're at 733. So you had over a dollar bushel of carry from the SEP to the March. So there's not a lot of incentive for any commercials to sell wheat with this kind of carry unless they get rewarded from a basis perspective. So you're going to see soft wheat basis have to rally. See, another way to think about this is, and this is an interesting thought we were talking about the other day. The front end of this whole market, whether it's KC, Minneapolis, or Chicago, is being discounted because of cheap Russian wheat, right? It's driving down. Cash market's driving down futures. The carry is pricing in the risk of the market. So when you think about these wheat prices at 733, they're quite a bit elevated. That's the risk the market is putting in just the forward curve of the futures. Now, what do we know about carries? Where that lead month goes off, the next month likes to see. That's why the funds are selling this thing. If you want to see a reason why the funds are aggressively been selling it, it's because of the carry. Because they know if they're selling DEES and the DEES March goes to 30 and they can roll their shorts forward at 30, they're capturing that spread. And that's like we said, in big carries, it's long-term bearish futures because these carries are, they're a price point out in the back that doesn't move and the front end keeps moving lower. So that's my little talk on that. So delivery wheat stocks in Chicago, getting much bigger. Are we going to eclipse these levels we saw in 16, 17? No, but clearly we're going to get above 60 million bushels, 600 million bushels or 60 million bushels, whatever it is here. Just because we're going to continue to see Ontario wheat work into the delivery houses in Toledo, and probably see more wheat work into the delivery houses in the Chicago delivery system. White wheat, real quick. Like I said, they dropped production, so that's going to drop carry out, total supply. They lowered exports a little bit. They are keeping food demand static. They actually have a negative feed and residual. And white wheat carry out, like I said, we're going to drop year over year on carry out to use. So this will become important as we move into the Australian growing season, because we can see some competition or some demand show up for U.S. soft white wheat later in the year because of a smaller Australian crop. Now, earlier they run into a problem in the PNW also on too high a protein on the soft wheat. As they've moved into Washington, the proteins have come down on that soft white, so they'll probably have an exportable product they can blend and move out. Durum, just wanted to throw this up, but we talked about durum quite a bit the last time. The world's got a true problem with durum production. U.S. production's down. Supply out of Canada is going to be down. Exports are going to be up a little bit, and the food demand strike is flat. But we get our imports from Canada. So if we see a smaller Canadian wheat crop, do we see smaller imports to the U.S.? Like smaller Canadian wheat crop is going to impact the global import market more than the U.S. So like I said, the world's got a durum problem, and it's not going to go away. So we do look at some cash durum wheat prices. I thought I'd throw these up here. These are just farmer bids domestically, North Dakota, Montana, in the triangle. But we're well over $10. I think this chart's a little old. I bet we're closer to $11 now on cash durum. So if you're, as we say, friends don't let friends trade durum, and if you need to buy your durum, buy it early and buy it often. And you can see the durum carry out to use is going to continue to drop. So just kind of summarize the whole August report. Russian EU wheat's going to keep pressure on the front end of the market. The back end of the markets where the risk is getting pushed out, and the carriers are doing that. But we're not going to see any change in the front end of this thing unless we see the cash markets move up significantly. You won't see the futures do anything unless we see these headlines and something dramatic happen to potential Black Sea exports. U.S. wheat, we've got our inelastic export demand. We're flipping the hard wheat, spring wheat grinds back to more hard wheat. So soft wheat is priced right into the export market, but the carries kill it. Like I said, the front end of the soft wheat market shows cheapest FOB prices, but go look at the OND and the JFM because of those futures carries, and that's BSR that's going to limit U.S. exports because of the carry in the futures market. And millers don't want to buy that either. Farmers want to sell that, commercials want to sell that, but the end user, he doesn't want to pay for that either. So where we're going to see acres long term, like I said, we'll probably see smaller, lower new crop prices for spring wheat or for soft wheat, for hard wheat. Spring wheat still, work in progress. So acres will probably be flat year on year, I would imagine. What's that do for imports? The next 3 to 5 years, we've talked about this a lot. Are we going to have to start offshoring mill demand into the U.S.? I think this year was the first real experiment with it, with the German and the Polish wheat coming in, and a lot of squawking done about it. But if these U.S. millers have to source wheat offshore, they're going to do it. It's just not going to be something they're going to not take advantage of if they can. So I'm going to leave it at that. Like I said, Northern Hemisphere, spring wheat progress. Spring wheat still a work in progress. The Russian crop looks to be getting a little bigger. Global milling is a quality issue. We'll start talking about the Southern Hemisphere. Like I said, Argentina, they're not getting any rain. I've actually seen the crop estimates down there are to 15.5 million, or 15.5 to 16 million metric tons. That's 1.5 million below the USDA. Australia is going into the critical growing season in the next 4 to 6 weeks. So we'll make that crop and see where that crop total is going to be. And, global demand remains flat, even though the USDA has got it up. We've got this Indian thing down, the outlier thing, but the high cost of commodities and interest rates continue to drive the importer to being just in time. And we're just not seeing a lot of export tenders show up. Cheap Russian wheat. If you look at the export lineup for Russia, like I did today, they're selling wheat to everybody. Kenya was their #1 destination, then it's Egypt, and it's Turkey, but we saw cargoes to Mexico, we saw cargoes to Brazil. Russian wheat continues to flow into all these markets, and it's about price. So if the world has to start coming for higher priced EU or US wheat, that becomes a problem for funding. We did see Egypt get some new funding come in from some more Arab money coming in, not only from the import bank, but a private firm associated with one of the countries there. I'm kind of running out of gas here, but some funding is showing up, but we'll have to watch that. My outliers, like I said, US and Canadian spring wheat production, EU quality on the milling demand side. This could be a story for the US the second half of the year. We're still talking China weather, not only on wheat, but on corn and on rice. Their economy is in deep trouble, it seems like. We had a lot of doom and gloom on China this week. But we know the one thing they will not do, they will not run out of food. So could we see more imports on wheat just on quality, potentially? But rice prices in Asia could drive not only the wheat imports, but other commodity imports. Like I said, the Indian wheat story, we're going to be following this. How many imports are they going to have to be? So this becomes an interesting question for not only this year, but next year also. So are they going to have to set themselves up for more imports next year because of this poor monsoon? The tail end of this monsoon has been very poor for not only some of the ground nuts, but some of the soy products later in the year. Like I said, geopolitics, the short term, long term, I don't know. We seem to come in here every weekend and have something happen in the Black Sea. Markets run up in the overnight, and the market, then the funds come in and discount whatever happens under the assumption that Russia is going to continue to export large quantities of wheat. So until we get an event that is a game changer over there, rallies look to be sold. But we are getting down to some flat price levels, so I think we should bring in some consumer demand also. All right, that's about all I got. Thank you. Like I said, we will get this published on the YouTube site in a couple days. So if you have anybody you want to send the link to, we'll put it out in the week letter, and I'll send it out to customer base. That's all I got. Any questions you see, Abby?
We don't have any questions, Mike. So thank you very much.
Okay. Thank you for attending. Thanks.
Thanks. Have a good afternoon, guys.